traders, this is Blake Morrow. Time to get this. We got to get this party started like ASAP. Since we've got ADP non-farm coming out in about a half an hour, so we need to rock and roll really fast. So let's go over to the euro dollar and let's start off with that. So the euro dollar 107, 108, pretty logical ranges that we're finding, right? What I was hoping last night. Let me delete some of this stuff. What I was hoping last night is we would get a move down to 107, basically 106.80. I don't know why that. Oh, remember I drew a bunch of stuff yesterday, and then my desktop pro seized. I don't know what happened there. But anyway, so I was hoping that we'd get a dip down to 106.80 to be a buyer, because I thought that would be a good place to play on the long side, just for the 618. We never got it, so it never happened. I was just hoping it would happen. Sorry, guys. The perils of waking up at 3-ish in the morning is my consistent yawning, persistent yawning. All right, but 108 did reject. All right, so I think this is really the range that we're dealing with here. Let me remove that. Let's remove this. That's relevant. That's relevant. Yellow trend line, is that relevant right now? Not really too sure. But really, it's 106.80 to 108. I think getting above 108 would be pretty bullish. Not necessarily like bullish, like, oh my God, the euro is going back to 115 bullish. I think the euro would be going back to 110. So remember, we're in a big range between 110.50. We're at 110.50 and 105. That's our big range, from here to there, down to here or up to here. So we're smack dab in the middle at the moment. So a breach above here, we're going back there, and a breach below here, and we're going back there. I think it's pretty easy to identify that. The question is, which way are we going to go? And I have to default to it is data dependent, because it is. I mean, good data. Out of the U.S., we head down here. Bad data, we head up here. I mean, it's and we've had a string of pretty weak economic data recently. The employment data has been very strong, and it'll be interesting to see if employment continues to stay strong. And if it does, which we'll find out today and Friday, then that could be the catalyst that drives us back down to 105. Okay, so 108, 106.80. 1.0680, and that's massive support. I think major support, and 1.0800, that is resistance. We are in a range. Okay, let's go over to the pound. So the pound, UK PMIs came in a point worse, 0.1% worse than expected overnight. So the cable got smacked around because of it. We came right back to the 786 support here. Now this is major support. So this has been holding for the last few days. That low today, I mean, yes, we hit a low of 147.38 and a bounce, but I'll tell you what, if we break below that 147.38, I'll just write down 147.40, right? 1.4740. If we break below that, we are going to test these trend lows, I would think. All right. Resistance. This cable's so choppy. Hold on. Ha! Looky there. Okay. Well, that's good to know. Easy peasy, just like the euro. Very similar story here. Here we go here. Here we go here. I wish I knew which way we're going to go, but the range is probably from here to here. Okay, same thing. Just kind of wait for the breakout, and you know which way we're going. Just kind of wait for the breakout, and then wait for the euro to follow suit. Okay, so 148.70. Okay. We are in a range. Aussie. Oh, I'm sorry. Let's go Swissy first. Swishy. You see? Here comes the swishy. My name is Bugsy Malone, and we had that inverted head and shoulder pattern. Couldn't do it, couldn't do it, couldn't do it. Complex head and shoulder pattern never took out the neckline. But let's delete all this. Drawing, remove, lines. Okay, here we go. Now, that is my mouth making those noises. Okay. Right? Okay. 127% extension. That held. This is a, thus far, 38% retracement. So that tells us right here that this is very, very critical resistance as far as I'm concerned. Okay. Very critical all the way through here. It's hard to say where support's going to be for the Swissy, but I will tell you that this is really important resistance. So that comes in at 97.50. Pretty key resistance. Support. Where are we going to find buyers here? Where, oh where, oh where? Where will the buyers emerge? It's hard to say. I mean, I think and I hate to say this just because I'm long the Swissy, but I say while we're below that yellow line, it's probably more bearish than anything. You know what I mean? We have to scale these levels right over here to really turn bullish. Like I said, and I'm long the dollar Swiss. I don't like saying that, but just from an unbiased standpoint, um, you know, so oh my God, uh, that's beautiful. The Alpina B6 Grand Coupe debut. Sorry, I'm a bit of a car fanatic. That's a beautiful BMW right there. All right, sorry. Going back over to here. That seems like good support, but again, I don't know where really good support's going to be for the Swissy. I'm thinking maybe back down here at that breakout point, but that didn't show us that it held on the way back down again. You know what I mean? So, um, okay. For today, we're probably going to just have to mark the lows. No, we can't do that. It's too far. It's too close. So 96 cents will probably offer good support. I just don't want to write that down either. That's too far away from where we're currently at. 38% retracement comes in at, okay, 96.50. That's probably, it's not great support, but it's support. Okay, let's go to the dollar yen. So the dollar yen, unfortunately, because I am short the dollar yen, jammed right back up to trendline resistance. You see how important this is, because if we have strong data, the dollar yen should rally. Okay, and wow, wait, hold on, let me go to do this again. Big confluence up here. All right, so if we do rally, 120.60 is going to be the next level of resistance. Definitely in a range. Support, right, came right down to our support from yesterday. 119.50. We went to 119.40, so again, 119.50. Okay. Let's go over to the Canadian. So the Canadian, upper end of our range, we got a nice head and shoulder pattern developing. Um, well, that really held as resistance through here, huh? That's really key for the Canadian at 127. Support. $126.45. Hold on really quick. Let's get rid of that. Oh yeah, 126.45. 126.40, which is the 38% retracement. Okay, so there's your Canadian. Let's go over to the Kiwi. Kiwi is showing some weakness. 618 retracement came into play, and that held. Horizontal support comes right through here, so that is support. 73.70. Excuse the sniffles. That's a pretty massive support there for the Kiwi. Resistance. Where is resistance on the way back up? Probably 75 cents, which will be right through here. The overnight spike highs, you can see them. That so we have to scale back above that 75 cents in order for us to let's remove that. For us to, you know, start to rally again. Okay, so that comes in at 75 cents. Okay, let's go over to the Aussie. Now the Aussie, keep in mind, guys, this thing, I mean, look, we're basically at the same price we were yesterday, but this thing is within striking distance of being an absolute crap show. I mean, if we take out those lows, it is going to stop out everybody. Everybody's playing the Aussie to the long side from down here. You know, trader wise, I mean, you know, I think there's a lot of bottom pickers that might have smelly fingers after this one that are trying to buy the Aussie down at these levels. Okay, 75.50 is, we have 59, but 75.50 is massive support. So 0.7550, massive support. Okay, resistance. Now you can see these spikes here. That comes in at 76.65. We have to get above this for the Aussie to start back into the range. Right now, it's 76.65. Okay. Right now it's bearish. This sell-off has been very steep, very strong, and very scary for bulls. And we're within striking distance of putting the 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 bears strongly back in charge. Okay, very close. All right, so let's go over to the dollar index. Oops. Okay, so here's the dollar index. Let's go over to an hourly. Oops, that's not an hourly. Here's an hourly chart. Okay, so we got quite a mess going on here. So let's thin this chart out a little bit. Okay. So as far as yesterday went, pretty good rejection in the dollar index as we approached that previous support. Okay. Let's get rid of this fib level. It's also the 618. Okay, so you can see that. Actually, you know what we'll do? Let's get rid of this one. There we go. Much better. All right, so let's get rid of that. We're sitting on support right now. Let's get rid of that. We don't need that currently. Okay. Oops. So this 618 really can, this in previous, see how we hit that previous spike low, 618, that rejected us. That is key resistance. So key resistance comes in at 98.65. 0.98, oops, 98.65. That is key. Is it 6.5 or 8.5? Hold on. 6.5. Okay. That's really key resistance. And support, we came out of this triangle here, but support's going to be right through here. So that comes in at 97.90. Okay, we're still in the range. All right, so here is your bias chart. Take just a couple minute break. When we come back before ADP, I'm going to go through some questions really quick. Try to nail down some of your questions. I'm going to go back to the way back to the beginning. Don't go anywhere. I'll be right back.